Alright, good day everyone. Welcome to another session of Jambites tutorial. And in today's video, we are going to be looking at the topic bank reconciliation statements under financial accounting. And we are also going to be looking at the factors that cause a difference or that can cause a difference in the balance of the cash book and balance of the bank statement. Also, we are going to be drawing up the format for the adjusted cash book and that of the bank reconciliation statement. So quickly, what is a bank reconciliation statement? A bank reconciliation statement is a report being prepared by an account holder in order to reconcile the differences between the bank column of the cash book and the balance of the bank account. Now, in this case, when the bank statement is being sent by the bank to the account holder or to the business or to the customers that has an account with the bank, in many cases, it happens that what the balance of the cash book will not be equal to the balance in the bank statement. And what causes this difference are what we call those factors that affect or that can cause such difference, and we are going to be looking at them and taking them one by one. Number one, here we have unpresented checks. Unpresented checks are checks issued out for payment but has not yet been presented to the bank as at when the bank statement is being prepared. Now in this case, I will explain this by saying, let's say for example, I run a business and my business issue out check to its supplier or creditor for payment. In my cash book, initially, we say that in the cash book, we debit all cash received or all income received, and we credit all payment made. That is the posting of the cash book. Now, when I issue out check for payment, my accountant, the accountant of the business, is expected to credit the cash book, and my bank account will be debited. But in this case, the check has not been credited as at when the bank statement is being prepared. The check has not been presented to the bank. Now, in this case, my cash book will show a lesser balance, while my bank statement will show a greater balance. Why is that happening? It's because in my cash book I would have credited the amount that I'm making payments, and that will reduce the money in my account. But the bank account, my bank has not yet received the check. So in that case, my bank will not record that transaction. And when the bank statement is being prepared and sent to me, I would notice that the unpresented check has not reflected on the debit side of the bank statement, making the balance of the bank statement and the balance of the cash book unequal. Now, so this is one of the factors that can cause a difference in the balance of the cash book and that of the bank statement. Now, in the BRS, that is where we are going to put the unpresented check. So I'm going to draw up the format after explaining them. We also have number 2, we have uncredited checks. Now for uncredited checks, these are lodgements. We call it uncredited lodgements. Also, these are checks being deposited into the bank but has not been credited to the customer's bank account as at when the bank statement is being prepared. So the effect on this is that the cash book will show a greater balance, while the bank statement will show a lesser balance. Because when I receive the check has been debited to the cash book but has not yet been credited in our bank account, our bank statement. So that now quickly let us talk about the adjusted cash book. Now this adjusted cash book is prepared in order to correct mistakes or error that has been made in the former cash book. Now the first items I'm going to be listing, or the first side I'm going to be listing, are items on the debit side. Now on the debit side represents the income side, right? So we have one of the factors that also cause a difference, but then it is being recorded in the adjusted cash book. These two will be recorded in the bank reconciliation statement, which I'm going to draw the format before the end of this video. Now we have credit transfer. For credit transfer, we say that credit transfer is a type of transfer that is being made directly into the bank account of the customer without the customer being informed. Now, this is an income. When a customer receives money into the account directly without being informed, we refer to such transaction as what? A credit transfer. Because in this case, the bank would have credited the customer's account, but then the cash book of the customer would not reflect such transaction because he or she is not informed. So in that case, we have to record it on the debit side. While we're recording that transaction, that transaction has been recorded in the bank statement, but has not yet reflected in the cash book. So in the adjusted cash book, we are going to bring the credit transfer, the amount that has not been recorded in the in the cash book. So that's why we are recording it now, because it was not recorded before. All right, so we also have dividends. Now dividends can also be called, or let us say it is under credit transfer, when dividends is actually a part of a company's profit that is being sent directly into the company's account without notifying the company. Now when such happen, what will be the effect is that the company will not record that transaction in their cash book, but the bank account will already reflect that transaction, because the bank account has been credited but the cash book has not been debited. So what we are going to do to correct that is that we are going to bring that dividends to the debit side of the cash book, which is the adjusted cash book. That is, we are now adding up that amount that has been credited to our bank accounts. We are now adding it up to the cash book. So our dividend will come here, which is on the debit side as well. All right, so on the credit side, we are also going to have, we can have what is called standing order. So for standing order is an instruction given by the accounts holder to the bank to make certain payments on his behalf. Now this can be in form of let us say you as an individual, you can also give your bank, or let us say some subscription that you do, that you just press auto renewal, that is without informing you, they should debit you, direct debit. So in such case, when that happens, we expect the accountant to credit that amount in the cash book. But then because he or she is not aware, because it is a direct debit, he or she is not aware. Now in the cash book, in the initial cash book, standing order will not appear, and it should have been reflected on the debit side of the bank statement. Now in the adjusted cash book, what we are going to do is that we are going to credit the adjusted cash book with standing order to reflect that amount that has not been recorded. So that is for standing order. So we can also have these honored checks. Now dishonored checks are checks rejected by the bank. They are checks being lodged into the bank but were later rejected. Now in this case, it has already been recorded on the debit side of the cash book, because when we receive this check, we assumed, or we know that we are receiving that check, so we are receiving income. So we debit all cash or all income to the debit side of the cash book. Now in the initial cash book, it has been debited, but now that the check has been rejected, dishonored due to some certain reasons, maybe wrong signature, insufficient balance. So in that case, when the check is being rejected, we want to remove that balance from the debit side of the cash book by what? We are going to do that by crediting the cash book to remove. So that's what we call set off, to remove the balance from the debit side, because the check has been dishonored. All right. So the next one we can have here is also bank charges. Now bank charges are fees charged by the bank for services that they render. Now in this case, bank charges will be deducted directly from the customer's bank account, and in some cases the customer may not be informed or aware. So in that case, the bank charges will not reflect in the cash book or the credit side of the cash book, because it's like you're also making payments, so money is going out, so it will not reflect. Now in the adjusted cash book, you are expected to put the bank charges on the credit side, reflecting that amount that has already been reflected in the bank statement. That is, the bank charges will be on the debit side of the bank statement but has not entered the cash book, so we are not putting it there. So that's why we're having bank charges on the credit side of the cash book. All right, so we can also have some other factors whereby we have the payment undercast. We also have payment overcast, receipt undercast, and payment overcast. Payments overcast. All right, so for each of these factors, for payment overcast, we already know that what anything payment in a cash book will be credited, and anything receipts in the cash book will be debited. Now for payment undercast are payment already recorded in the cash book to the credit side of the cash book, but they are understated. I come again. Payment undercast are payment already recorded to the credit side of the cash book, but understated. Now to sort out the difference, to solve that problem, now we are going to still credit the adjusted cash book with what the differences in that payment. Let's say for example your payment undercast now is that, let's say for example initially you are supposed to record 5,000 naira, but this amount was understated. That is, instead of 5,000 naira you recorded 500 naira in the initial cash book. Now when you want to record this, you are expected to what? You are expected to find the difference between these two balances, which is 5,000 minus 500, which is what? Which is 45. So you are expected to record 45 to the credit side of your cash book in order to sort or to solve that problem. Because initially you are supposed to record 5,000 naira, but the amount was understated by 45. So now you are now recording 4,500 naira in order to cancel, or let us say to sum up to 5,000 naira. So for payment undercast, is going to be on the credit side of the cash book. Now for payment overcast are payment already credited to the to the credit side of the, already posted to the credit side of the cash book, but overstated. These are payments already posted to the credit side of the cash book but overstated. Let's say for example you are supposed to record 5,000 naira. Sorry, let us say for example you are supposed to record 500 naira. You are supposed to record 500 naira, but you mistakenly record 5,000 naira. So that means you've overstated the amount by what? By 4,500 naira. To correct that transaction, you are going to post your payment overcast to the debit side of the adjusted cash book in order to what? To cancel out the difference in the credit side. Initially you've recorded 5,000 and that's zero. You've overstated the amount by 45. Now you want to cancel out, you want to remove 45. You're not going to record it by finding the difference, 5,000 minus 500 naira. You're going to now put 45 on the debit side of the cash book. That is cancelling out the difference that was all the amount that was overstated. That is payment overcast. And that means for payment overcast, whenever you face any or you see any transaction or any questions that you can identify as a payment overcast, you are expected to debit it, and if it is payment undercast, you are expected to credit it. Now let us move to receipt undercast. I come again. We know that for every receipt, it is expected to be debited to the it's supposed to be posted to the debit side of the adjusted or the cash book. For receipts undercast are receipts already posted to the debit side of the cash book, but they are understated. That's why we say that receipt undercast. We know that for every receipt, for every money coming into the business or into the customer's account, it is expected to be debited in the cash book. Now for receipt undercast, it's saying that when we receive money and that amount of money is understated, we are expected to correct it in the adjusted cash book. Now receipt undercast is going to be debited. It's going to be debited in the adjusted cash book. Why? Because we are saying instead of recording 5,000 naira, Instead of recording 200 naira, we recorded 20 naira. So the difference is going to be recorded here, which is what? Which is going to be 180. If we are supposed to record 200 and we recorded 20 by mistake instead of 200, so that means we've understated the amount by what? By 180, by taking the difference of these two. So when we want to record, we are now going to put receipt under cast, and we are going to put our little workings that what? 200 minus 20 equals, the difference is now 180, and that is the amount that will balance up with the 20 naira that's already been recorded that we said that was understated, and that will still make up to 200 naira. So that's how to correct that error. So receipt under cast will be debited. Likewise for receipt overcast are receipts that has been debited to the cargo but overstated. There are some of money that have been what? Debited to the cargo but they are overstated. To correct them, let's say for example we are supposed to record 300 naira to the debit side of the cargo. By mistake we recorded 3,000 naira. We know the amount has been what? Overstated, and in that case we are going to what? Find the difference, and we are going to remove it from what? The debit side of the what? Of the cargo. And in accounting, when we want to even remove anything from the other side of the cargo, we post the difference, whatever amount we want to remove, to the what? To the other side, in order to take out the difference when you are balancing the account. Now for receipt overcast is going to be credited. That is, the difference is going to be what? Posted to the credit side of the cargo, and then you can now balance your account. We know that the cargo is expected to have a debit balance, because this is where we receive money. This side represents the side that money, when money is being received, we record it to that side. And this side, the credit side, represents the side whereby when payment is being made, we record it to that side. Now, so when we are balancing the figure, we are expected to have a greater balance in the debit side and have a lesser balance in the credit side. So we are going to have a balance CD here, and this amount, your balance here, is going to be brought down in the what? In the bank reconciliation statement, and we are going to write this balance as per adjusted cargo. So this amount is going to be what? Is going to be what? Posted to the what? Bank reconciliation statement. I said the other time that we are going to record this inside the what? The BRS, the bank reconciliation statement. And now, after you've started with balance as per adjusted cargo, you are now going to add up unpresented check, then the sum of these two, you are going to put it here. Then you are going to less uncredited checks. For uncredited checks, we are going to less it. So the value, let's say this is 2, so the value will be what? Will be posted below. Then we also can have bank error. So sometimes it is being added and sometimes we are going to less it, depending on how it is being given in the question. So your bank error simply means when there's a wrong debit or a wrong credit to your account. So that's why I said it could be added or taken out from your what? From your balance. All right, your bank error will also appear here. Then we are going to have your final balance. Then this balance is going to be called balance as per bank reconciliation. Balance as per bank statement. Balance as per bank
statement.
Yeah. So if you are getting your balance as a bank statement first, because in some cases you are going to be given this balance in your question. So you can start with this balance instead of starting with the balance as per adjusted cash flow. The only thing is that you are going to do the reverse of this, where we add unprecedented check. That is, unprecedented check will be what? We are going to less it from the balance as per bank statement, and uncredited check that is being deducted here, we are going to add it to balance as per bank statement if you are starting with balance as per bank statement. But if you are starting with balance as per adjusted cash flow, this is your format, and you are going to get your final answer, which is what? Balance as per bank statement, which must be the same with the one that was given to you in the question. And so please, this will be the end of the video. Please kindly subscribe to our channel, like, and drop a comment in the comment section. Thank you. See you later.